معرفة.
It is what we are experiencing, the global financial crisis, is a crisis of capitalism. Liberal capitalism, crony capitalism, they have different versions. But over the years, I think the tail end of it, I also touched on the subprime mortgage crisis in the US. And what happened that the property prices were rising over the years. Each time there was a marginal rise in the price of property, they refinanced. So much so that the same property is refinanced 3 or 4 times, layers after layers of financialization, to the extent that the property was under burden of debt. And they did the greed of making more money to the extent that they didn't look at the ability for repayment. They didn't bother about that. This the kind of the euphoria and exuberance that took over the market. The capitalists and bankers and fund managers, they were only too happy. Financialization overburdened the real economy. And this became not just later and a development it's been a consistent development over decades. By the time of the subprime crisis, from the writings that you might have seen and I have seen, that the distance between the real economy and the financialization of the economy was grown 600 times. That the amount of debt that was generated was 600 times the amount of the real assets. And this is the question. This is the question. The bubble split, exploded. And the rest of it is, of course, history we have seen. But the strange part of it is that we had one crisis in the 97, 98. The next came 10 years later. And after that, now is getting shorter and shorter, the gap between the crises. And the one that we are experiencing in Europe is again a crisis of debt. Now, earlier it was individuals, now it is the states in the system as a whole, to the extent that it is now putting the credibility of economies and of the whole system into serious questions. Whether the ripple effects of this, we say that Southeast Asian economies, they had the shock in 97, 98, and they tried to improve the banking system, the financial system, the debt size was reduced and so on. Good work was done, but they are not in the dominant position. They still are at the receiving end of the tide of instability. But the worst part of it is that poverty is increasing. The general society, the storyline goes, it is privatization of profit and socialization of loss. And it is inherently unjust and unfair that the poor suffers, but on the side of the capitalists and the exploiters, the distance between the haves and the have-nots has been growing throughout 20th century, especially after the wars. At one time we used to hear that the lowest and the highest paid were 30 times the gap, but now it's more than 100, say 200 times the pay gap. It cannot stand to the kind of either logic or humanity or to the sense of fairness. And this is where we see that things are different in Islamic finance. Islamic finance cannot tolerate or proceed over debt. There are internal limits. For one thing, Bay' al-Dain is actually prohibited. You cannot proceed over debts if debt dominates both sides of the bargain. Debt is acceptable if it proceeds over real assets and services, but only if it is on one side of the bargain, like salam, like Bay' Saman Ajil, like the ordinary sale. Either the price can be delayed to a later date and it becomes a debt, or the subject matter, delivery of the subject. But you cannot postpone both in form of debt payable in future, because it would amount to gharar, uncertainty and risk-taking. And this is what exactly it is, the element that you find in capitalist economy. The risk-taking unlimited, debt generation unlimited. The poor is downtrodden. The capitalist is exploited. And this is the philosophy again of the prohibition of riba. Riba is exploitation. The poor is at a losing end. The capital owner is in a strong position, and you put the basic movers of deprivation and disparity when you start by imposing. You borrow at a certain amount of interest. You don't know what happens in 3 years, 4 years time. The person loses his job, or make big losses, or some climatic, agricultural calamities, or life is unpredictable in terms of the kind of risk-taking that is involved in trading, in finance. And these are the lessons that we can learn from Islamic approach to finance, to banking, to the basic principle in these contracts that you have, like musharaka, mudaraba, Bay' Saman Ajil, murabaha, salam, etc., is that they all proceed over the real economy, and that is not financialization, doesn't have much place. Money itself cannot be as a commodity. In a capitalist economy, this is another aspect. That money there is so much financial instability because money has become a commodity, and the interest rates changing. And when the unit of value is subject to so much instability, then the rest of it would be affected in the same way. This is the story of banking interest that has become exploitative. The base lending is 2%, the bank lending is 7%, 5% margin. The kind of leverage that you allow in the future trading and other lines of trading is 1 to 40 times in this, what it is called, fractional reserve banking. The bank has $1, but it is allowed to generate money 40 times over. This is what we are up against, that it is not only gharar, but it is fraudulent. The customer's money is placed in hazardous trades without the customer's approval, without the customer's involvement, if the customer does not even benefit from it. And when the time comes for loss, it's the first time the customer. The other is that the bankers don't share loss. They only make profit. That is the nature of interest.
Right.
They don't share loss. Islamic banking proceeds over the idea of profit and loss sharing.
معرفة.